Welcome everyone to today's webinar in the Internal Audit Skills Training. Today's webinar will be covering fieldwork. My name is Jim Kaplan. I'm founder and owner of AuditNet, and I'll be moderating today's webinar. Today we're pleased to have with us Bill Woodington to cover, as I said, fieldwork. For those of you who don't know me, I'm the founder of AuditNet with a background as a chief audit executive, Internet for Auditors pioneer, and an auditor who believes and promotes the use of audit technology. Before we proceed to our presentation, I would like to remind everyone of the housekeeping rules. The housekeeping rules are available as a handout download. You'll see them in the attendee control panel on your screen. I have also sent the rules via email to your registered email address. In the interest of time, I'll not read the rules, but everyone is expected to review and adhere to them for this and all AuditNet webinars. In addition to the handout of the rules, there is also the slides available for download. If you can't download the slides from the control panel, I'm sending a link to everyone, and you'll be able to download those slides from SlideShare. If you can't get the slides that way and you send an email, there will be a processing fee to send you the slides. Some important items to note: we are recording today's webinar. If you're a subscriber or site license user and you meet the CPE criteria, you will receive a CPE email within 5 to 7 business days with the link to download your certificate if you requested CPE. If you said you do not want CPE, you will not be receiving that email and link. If you're not a subscriber or a site license user or did not request CPE and qualify for CPE, there will be a processing fee for processing the CPE, no exceptions. You must answer all the polling questions during the live session. Thank you, and let me now turn the floor over to Bill Woodington so that he can provide his background and share with you his experience and knowledge for today's topic on fieldwork. Bill?
Thank you, Jim, and welcome to everyone. I'm super excited to bring this to you today. Just before we get into our topic, just a little bit about myself. I worked 22 years in the internal audit group at Wells Fargo, 18 as head of training, 18 as head of learning and development. Kept me busy, good job. We had about 500 auditors when I was there. But for years, and I don't know if you've ever thought about this, but for years I had thought about starting my own business. I mean, when you're little, what do you want to be when you grow up? I'm going to have my own business. Well, up until 5 years ago, that had not happened. I had done some training outside of the company I was working for at that time. People were approaching me to do training. Finally, in March of 2012, maybe the hardest decision I ever made was to leave that company I'd worked for 22 years and go out on my own teaching internal auditing and professional development seminars. I teach 7 different face-to-face seminars. So at the end of the webinar today, I'll have my contact information. I teach 4 on the audit side, 3 on the professional development side. I teach a new auditor training, an auditor in charge training, a combination of those 2 I call audit skills. I also teach the review class for the certified internal auditor exam. If any of you are thinking of taking the CIA exam and you just want my advice on how to prep for that, just shoot me an email and I'll send you some links to what I think are good prep materials for that exam. I also teach 3 non-audit seminars, a business writing class titled Writing to Achieve Results, and 2 leadership classes. Today's topic out of my Auditor in Charge class on fieldwork, the essence of what auditors do. Now, before we get into this today, I just want to plant a couple thoughts in your mind. Is there a right way to do our work? Is there a right way to do our work? And who are the best auditors? Who are the best auditors? I'll give you my thoughts on that as we go through this today. Before, again, we get into this, I just wanted to share something with you. You know, when I came to Wells Fargo in internal auditing, I knew nothing about internal auditing. I mean, my background, I had worked 3 years in public accounting, 5 years in a corporate controllers division. I come to the internal audit group at Wells Fargo. I know nothing about internal auditing. But my boss assumes I do. She's like, Bill, you're leading an audit in 2 weeks. See ya. I'll be in my office if you have any questions. I mean, I don't know what to do. It's hugely frustrating. I was asking questions to people around me. People were trying to be helpful. Hey, Bill, you got to start planning your audit. Yeah, good tip, good tip. You know, I mean, I don't know what to do. You know what I thought? Because that was such a frustrating situation for me, if I ever could get into training, and why I'm doing what I'm doing now and what I did for 22 years at Wells Fargo, a whole different story, but what would I want? I mean, if I came to a webinar like this, what would I want that would actually be helpful, that I could actually use? I mean, I'm really hoping this will help you out. Fieldwork, the bread and butter of what auditors have done for years. But remember, is there a right way to do this? Is there a right way to do our jobs? Now, I mentioned one of the things I'll share with you today is just my thoughts, who are the best auditors. And one of the attributes of a good auditor, just my opinion, is someone who could always sell the importance of the control based on risk. What? They could always sell the importance of the control. They could always sell his or her point of view based on risk. I mean, let me give you an example. You're doing testing, I'll use myself. I'm doing testing of reconciliations, and I find that management is not reconciling this key general ledger account. So I go to the manager of the business and I say, hey, Mr. Manager, you're not reconciling this key general ledger account. And the manager says, well, I don't care. I mean, I've never reconciled this account. I'm not going to start now. So what? So what if I don't reconcile this key general ledger account? The bad auditor, people that I often call a checker auditor, all that person knows how to do to sell their point of view is cite a criteria. All they know how to do is check for compliance with some policy. Again, they say to the manager, hey, Mr. Manager, you're not reconciling this key general ledger account. And the manager says, so what if I don't? The bad auditor says, well, don't you know there's a policy that requires you to reconcile this account? Yeah, I don't think you heard me. I'm not going to reconcile this account. I've never reconciled this account. I don't see the value in reconciling this account. What should a good auditor do? Who are the best auditors? Remember what I said, they could always sell the importance of the control based on risk. They could always sell his or her opinion on the importance of the control based on risk. Same scenario, hey, Mr. Manager, you're not reconciling this key general ledger account. So what? So what if I don't reconcile this account? We just had a $7 million fraud loss in another area of our company. Same type of account that wasn't being reconciled. If they had reconciled the account, we would have caught the fraud and reduced our losses. You need to reconcile. Risk, risk. A good auditor can always sell the importance of the control. Hey, Mr. Manager, you need to reconcile this account. So what if I don't? We had a scenario, same type of account that was being manipulated for fraudulent purposes. If they had reconciled it, we would have caught it. Risk. I want you to keep that in mind as we go through the webinar today, that we're always selling the importance of the control based on risk. When we sit across the table from management and they're pushing back on us and they're asking the so what question, so what if I don't have the control? Can you sell the importance of the control based on risk? I'll come back to that several times in the webinar today. All right, here are the learning objectives for today. And by the way, anytime you go through training, you should always see learning objectives. I mean, I don't know if you've ever attended a webinar or a seminar in the past where not too long into it, you're thinking, what are we doing? Well, here are the high-level objectives as we go through this today. We'll talk about some things I cover when I teach my CIA exam review classes, a little bit on that. I'll even have a couple CIA exam questions in the webinar today, just to test your knowledge. We will also have 4 formal polling questions today. Remember, you need to answer the polling questions if you want to qualify for CPE credit, and I'll have Jim launching those polling questions throughout the webinar as we go through this today. We'll talk about audit evidence. We'll talk about work papers. I'll show you a work paper that I like as I travel about teaching seminars for various internal audit groups all over the place. I'm just picking and choosing, using examples of what I think are good examples of how we should do our work. And again, I'll show you a work paper today, and we'll talk about what a good work paper should contain. We'll also talk about how we should document control weaknesses. And we'll talk about issues and recommendations, the most significant control weakness that typically ends up in the audit report. And I'm just going to tell you this, as I look at audit reports from various internal audit groups all over this country, a lot of audit groups struggle with writing issues and recommendations. What do they struggle with? What do they struggle with? Well, we'll talk about that as we go through the training today. You've got copies of the slides, or you can at least see the slides today. I won't read the slides to you. Yay. I mean, I'm just going to talk to you. I know you can read the slides. I might point to a bullet or something like that, but overall, I'm just going to talk to you. What would I want, again, if I were you coming to a session like this, that I could actually use, that actually might be helpful to me? And again, I'll have my contact information. Don't ever, at the end of the webinar today, don't ever hesitate to contact me. I will always get back to you, including one of the templates that I'll show you today. If you want me to email that, I'll be happy to do that for you as well. You know, one of the things I struggled with when I got into internal auditing was terminology. I mean, again, I worked in public accounting for 3 years. Coming in internal auditing, the internal audit terminology was different than what I was used to in public accounting. And two terms that often threw me for a loop initially was this concept of control adequacy and the concept of control effectiveness. Control adequacy. On paper, is this a good control? I mean, I'm thinking of control design. On paper, does it look like this control would have a substantial effect in reducing risk? I don't know if it does or not. I don't know if it's working. I just mean, you know, if I look at a policy or procedure, does it look like this control would have a substantial effect on reducing inherent risk to a level of residual risk that's prudent? And then the concept of control effectiveness. Is the control actually working? In the planning phase, the in-charge auditor assesses control adequacy. In the fieldwork phase, what we're talking about today, the auditor tests for control effectiveness. Always, always. I mean, let me give you an example of these two terms. One time I was leading our cash vault operations audit. I mean, the cash vault has thousands of dollars in it, and as I was planning the audit, I was the in-charge auditor. I want to know what controls management has in place to reduce the risk of theft in the cash vault, somebody stealing money out of the vault. So I go to the manager of the cash vault, and the manager says, Bill, the vault is under dual control. What do you mean? We require 2 people to open the vault door. One person has the key, one person has the combination. No one person can get into the vault. It always takes 2. On paper, control adequacy, that sounds like a great control. Well-designed control and adequate control in reducing the risk of theft from a level of excessive inherent risk, of high inherent risk, to a level of residual risk that's prudent. All right, on paper that sounded like a great control, so I flag it for testing for effectiveness when I get to fieldwork. So now we're in fieldwork, what do? I just showed up to watch them open the vault. I mean, they're like, what are you doing here? I'm gonna watch you. And they're like, hey, the auditor's here. Anyway, sure enough, that morning, 2 people showed up to open the vault door. I mean, Sally had the key, Jim had the combination. They both did their thing and opened the vault. And they said, see, Bill, like we told you when you were planning the audit, we have 2 people required to open the vault door. The control's effective. The control is not only adequate, it's not only well designed, it works. They really do have 2 people opening the vault door every morning. I mean, that's what I thought. I was about to go back to my desk and open my work paper and type, you know, on January 7th, I watched them open the vault, Sally had the key, blah, blah, blah. Okay. But before I left, I asked them one more question. Do you have any spare keys to the vault? They go, yeah. Where do you keep them? And they just opened this unlocked drawer. They were like, see, they're right here. They just opened this unlocked drawer. They're real convenient. They're right here, Bill. If we ever lose one, they're right here. It's like, okay, your vault is not under dual control. Your control is not effective. I mean, if I have the combination and nobody's looking, I can get into this spare key drawer all by myself and get into the vault all by myself. You got to get these spare keys under dual control. In that example, the control was adequate. On paper, it's a great control, but it's not effective. It's not working. Remember what I said, planning phase, the in-charge auditor assesses control adequacy. Fieldwork phase, we test for control effectiveness. Now I just want to show you something here, just for a second. Oh. Go back for just a second here. I just want to show you something. This is a risk assessment matrix, all right? What is this? What is this? It's an Excel document. It's a document that the in-charge auditor uses in the planning phase of the audit project to identify the risks present in the business, to make a call on how significant those risks are. Is this high risk, moderate, or low risk? To identify the controls that management has put in place to address those risks, to make a call on control adequacy, just what we were talking about, to determine what controls we will test for effectiveness when we get to field work. All right, now how does this work? How does this work? Again, what is this? What is this? I'm showing you a risk assessment matrix that the in-charge auditor uses in the planning phase. Okay, what does the in-charge auditor do? Column D here. What are the risks present in this business? And this risk description should always answer this question. So what? Remember, when I get to field work and if I find the control is not effective, I should be able to go back to column D here to the risk description to sell the importance of the control. I'm not a checker. Remember, I'm a risk expert. I can always sell the importance of the control based on the underlying risk. And do you know how, and this is just what I notice as I travel about doing training, do you know how many audit groups write risk descriptions? There is a risk that which could result in, there is a risk that someone could steal money out of the vault, which could result in regulatory fines, losses to the organization, blah, blah, blah. Risk description should always answer the so what question. Now column E, how significant is this risk? Is this high risk? Is this moderate risk? Is this low risk? And remember, to have risk, you must have both impact and probability. The only time you have risk is when you have both impact and probability. Now column F, what controls has management put in place to address those risks? Not the controls I think they should have. I'm only going to list the controls they do have. Because if they don't have a control they should have, I have a finding right now. I can only ultimately test for effectiveness when I get to field work controls they do have. So in column F, I'm coming to management and management is representing to me the controls they have to mitigate the risk I listed in column D. I'm going to skip a couple columns here, just keep this simple. And let's do the assessment on adequacy here in column J. On paper, is this a good control? On paper, those two controls, does it look like those controls would have a substantial effect on reducing inherent risk? Are these controls adequately designed to reduce inherent risk to an acceptable level? Are they adequate or not? And in this little example, I'm going to say these controls are well designed, they're totally adequate. So here's the thought process. If this risk is high, and these are the controls management has put in place to mitigate those risks, and these are well-designed controls, column J, are you going to test those controls when you get to effectiveness, when you get to field work? Absolutely. And now column M, the last column here, where can I go to see how you tested those controls? You go to this work paper. You go to this work paper. Okay, I'm going to go back to the PowerPoint here in just a sec, but I want to make sure you caught something here. This is the tool the in-charge auditor uses in the planning phase of the audit project. Why? Why? Because I want to test controls that are associated with the highest areas of risk. I want to test controls in field work for effectiveness for the highest areas of risk. Column D, what are the risks in this business? And remember, those risk descriptions should answer the so what question. If I get to field work and I'm testing controls that are not effective, I come back here to sell the importance of the control. How significant are these risks? Impact probability. Is this high risk, moderate risk, low risk? What controls has management put in place to mitigate the risks? Not the controls I think they should have. I'm only listing the controls they do have. On paper, are these good controls? Control adequacy. On paper, are these controls well designed to mitigate those risks? And if this risk is high and these controls are adequately designed, column K, are you going to test those controls for effectiveness? Absolutely. And where can I go? What work paper can I go to see how you tested those controls? You go to this work paper. And now today in the webinar, we'll be talking about, back to the PowerPoint, we'll be talking about control effectiveness. Okay, Jim, if you wouldn't mind, if you would put up our first polling question today, I'd appreciate that. Again, control adequacy refers to which of the following. Most of you are doing really well here. Remember, you need to answer the polls to qualify for CPE credit today. And you are right, control adequacy refers to control design. And now, Jim, if you wouldn't mind, let's put up our second polling question today. And let's ask the question with regard to control effectiveness. Once we close this poll, I'll let you do that. Now our second question, control effectiveness refers to which of the following? Remember, control adequacy was planning phase, and as we're talking about today in field work, control effectiveness refers to which of the following? This will be our second polling question once Jim puts that up. You're doing great. We'll leave it open just a few more seconds here and see if everybody will vote. You are right. Is the control working? Fieldwork phase, we're always testing for effectiveness to determine if the control is actually working. Thank you, Jim. You can close the poll whenever you're ready. Let's go to our next slide here, and we'll have two more polls as we go through the training today. Really two types of controls, preventive controls and detective controls, okay? And you know, I'm gonna go back to that risk matrix I was just showing you here for a second. There was a column I didn't show you, I wanna show you now. Maybe you noticed it as I was going through that just a few minutes ago. Remember we were saying in column F here, we list the controls management is put in place to mitigate the risk. Now, some audit groups, look at column H, will flag the controls that they have listed in column F as either preventive or detective. Why do they do that? Why do they do that? Well, I think there's three reasons. I think you should see both. I mean, not always, but depending on the area of testing, usually management would want controls that both prevent bad things from happening and detect bad things that have already happened. In the example I gave you earlier with the 2 people required to open the vault, that's a preventive control. It prevents one person from stealing money out of the vault. The example I gave earlier about reconciling a general ledger account is a detective control. I mean, if we reconcile the account, we will detect the fraud, but the fraud's already happened. But if we reconcile the account, we will detect the fraud sooner and reduce our losses. So just my opinion, I really think typically you would want to see both preventive and detective controls in an area of testing. That's one reason I think audit groups flag control type that you see here in column H. Another reason they flag control type is just by knowing if it's a preventive or a detective control can help you determine how to test the control for effectiveness when you get to fieldwork. I mean, just by knowing the type of control can help you decide how to test the control for effectiveness when you get to fieldwork. And there's one other reason I'm kind of anxious to see what you think about this. I said earlier that to have risk, column E now, you must have both impact and probability. Risk significance is always assessed in terms of impact and probability. When I took the CIA exam, the Certified Internal Auditor exam, I think I got this question wrong, and here was the question. Preventive controls typically reduce probability. Detective controls typically reduce impact. It was kind of a true-false question, so to speak. And again, the gist of the question was this. Again, to have risk, you must have impact and probability. Preventive controls typically reduce probability. Detective controls typically reduce impact. You know, when I took the exam, I think I said false because I wasn't sure it was an always, always. But now that I teach the CIA exam review classes, I know the IIA believes that's a true statement. Now, whether you agree with that or not, here's the third reason I think audit groups list controls as preventive or detective here in the risk matrix. If this risk is high due to probability, and this is a preventive control, and preventive controls typically reduce probability, are you going to test that control for effectiveness when you get to fieldwork? Absolutely. Yes, column K. And if this risk is high due to impact, and this control 2 now, and this is a detective control, and detective controls typically reduce impact, are you going to test this control for effectiveness when you get to fieldwork? Absolutely. I mean, maybe I'm overthinking this, but I think another reason that audit groups flag controls as preventive or detective is because by knowing if the risk is high due to probability and it's a preventive control and preventive controls reduce probability, I'm going to test it. And if the risk is high due to impact and it's a detective control and detective controls typically reduce impact, I'm going to test that control. Let's go back to the PowerPoint. Examples of preventive and detective controls on this slide here. You need both. I think by knowing the type of control can help you determine how to test it for effectiveness. And that third reason I just gave you due to risk, whether it's by risk is high due to probability or impact. Let's go to the next slide. Through all this specifically, in the next couple slides, I've got IIA standards that relate to fieldwork. By the way, the bullets at the bottom of 2120A1, if internal controls are effective, they help ensure the things you see in the bullet take place. They help ensure the reliability and integrity of financial operational information, the effectiveness and efficiency of operations, the safeguarding of assets, the compliance with laws. Okay, controls are both adequate management of risk. They help ensure management achieves those objectives. I'm sure you know this, the 1000 series are the attribute standards, the 2000 series are the performance standards. There's really only two segments in the standards. The A's after a standard stand for assurance work, the C's stand for consulting work. The assurance work, what we're talking about today, the testing for control effectiveness, the essence of what auditors have done for years. Okay. I took a quote out of the Lawrence Sawyer book. And by the way, if I could pick one book that covers internal auditing A to Z, start to finish, it would have to be the Sawyer book. I mean, right now I'm chairing our academic relations committee for the Twin Cities IIA chapter. I live in Minneapolis, and I'm currently chairing the academic relations committee for our Twin Cities IIA chapter. The only reason I'm telling you this is as I interface with area universities, a number of colleges adopt the Sawyer book as their textbook if they have an internal auditing class. I mean, again, it's A to Z in internal auditing. When I travel around and for the large audit groups, a lot of the large audit groups will have the Sawyer book on hand as a reference tool. I mean, you might find this kind of funny. At Christmas, my wife asked me, "What do you want for Christmas?" I said, I want the Sawyer book on internal auditing. She's like, "Oh my gosh, you're so boring. Don't you want a tie?" I was like, no, I want the Sawyer book. Well, anyway, I got the tie. I didn't get the Sawyer book. So after Christmas, I bought the book because the IIA bookstore, and if you ever want to purchase this book, you can get it on the IIA website. They had a sale going on the Sawyer book, so I bought it. I mean, chief auditors will contact me and they'll say, "Hey, Bill, do you have a risk matrix you could send me?" I'll say, "Well, check page 36 of the Sawyer book. They got a really good one." "Bill, do you have an audit charter you could send me?" Check page 52 of the Sawyer book. Really good example of a charter. It's everything you ever wanted to know about internal auditing. And again, since we're talking about the testing for control effectiveness today, I took a little blurb here, the purpose of testing, as you see from the Sawyer book on this slide. Well, as we get into this today, I want to plant another thought in your head. And I'll have a separate slide, so you don't have to write this down if you don't want to. I'll have a separate slide to remind you of this, but here's the thought. When you are done testing a control, when you are done testing the effectiveness of a control, when you are done with your work paper, what is the one question you should always ask yourself if you were the auditor who did the testing? Would a competent third-party person be able to re-perform the work I did and come to the same conclusion I did? The control's effective or the control is not effective. What did he say? Again, the bottom line question you always ask yourself. When you are done testing the effectiveness of a control, would a competent third-party person, a regulator, a public accountant, somebody else in the audit group, be able to re-perform the work I did, pick the same sample, retest the same items, and that individual would come to the same conclusion I did? The control is effective or the control is not effective. And in today's webinar, we'll be talking about audit evidence that proves the control is either working or the control is not working. Now, there's a lot of different ways to test the effectiveness of controls. By the way, I saw this, and you see the laundry list here on this slide. I saw this on the CIA exam recently. Of the different testing techniques you see listed on this slide, what is the weakest form of testing technique? You know, I would have thought it would have been questioning. You know, just asking a question to the person we audit. Hey, Mr. Manager, is your vault under dual control? Oh, yeah, okay, the vault's under dual control. But you know, questioning was not the correct answer. The weakest testing technique, the correct answer was observation. What? I mean, I was there that morning. I watched them open the vault. I saw two people open the vault door. Why would observation be a weak form of testing technique? Well, you know this. Just the fact I was there that morning watching them, maybe the one time they do it right just to please the auditor. You know, go get Sally, the auditor's here. Right? People behave differently when they're being watched, and just the fact that the auditor's observing them may be the one time they do it right. I'm not saying you should not do observation in your testing for the effectiveness of a control, but usually maybe combine it with another testing technique to prove that what you saw is true. You know, when I was in public accounting, we did a lot of analyzing, a lot of analytical review techniques. Like I would compare the balance in a general ledger account today to the balance in the same account a year ago. And if the balance hadn't changed much, I would say balance appears reasonable, pass for further work. I mean, you know, I'm done. You might do some of that internal auditing, but I think the public accountings use more analytical review techniques than the internal auditors do. Just my opinion on that, but it definitely is an option for you, a way to test the effectiveness of a control. Again, I'm just letting you look at these slides as I go through this. I want you to just take a look at the first bullet here for a second. Remember at the start today, I said, who are the best auditors? And one attribute I gave you was they could always answer the so what question based on risk. They're not a checker. So what if I don't have the control, Bill? Here's what can happen. Here's the risk. If you don't have the control, here's the exposure. But do you know another attribute of a good auditor? In just my opinion, I always felt they were naturally inquisitive people. The people that need to know the answers to the who, what, when, where, why, how, those questions, or they're not satisfied. I mean, I had an auditor, I think it was her first audit. She came to me, she was testing reconciliation. She said, Bill, you told me there would not be any reconciling items for this general ledger account. I said, no, there shouldn't be, it's a clearing account. She said, well, I see a bunch of reconciling items here. And she said, I know it's just me. I know it's my first audit, and I really don't understand what I'm doing. But I'm the type of person that won't pass on something unless I have these who, what, when, where, why, how questions answered. So can you tell me, Bill, why this account has all of these reconciling items? I was like, you know, I can't. And I had one of our investigators, somebody who specializes in fraud investigation, take a look at this. We actually had a fraud. Now, maybe I would have caught it, but just the fact she brings it to me, naturally inquisitive, she highlights it, we catch it right now. The fifth bullet down, and this kind of goes back where it says tell a story. This kind of goes back to the interview skills, verbal representations from management. I have a little activity in one of my classes. You might want to try this someday. You might want to even try this with your significant other. Here's what I do. I get the students into pairs. One person tells a story, something funny, something interesting, maybe something from their childhood, fairly short, 45 minutes. The other person is the listener. The listener is not allowed to take notes, not allowed to talk, cannot do anything but listen while the story's being told. When the storyteller says, I'm done with my story, now the listener can talk. The listener must tell the story back to the teller as accurately as possible. Now, why do I do this? Why do I have this in my interview skills segment in one of my classes? Well, for a number of reasons. It brings up the importance of note-taking. I'll ask the students, the fact that you were not allowed to take notes while the story was being told, and I know it's a short story, but if it were a longer story, would you have been more accurate in telling the story back if you could have taken notes? And they'll say, oh, absolutely. Yeah, you got to take notes. The fact you were not allowed to talk, you were not allowed to ask any clarifying questions while the story was being told. Would you have been more accurate in telling the story back if you could have asked clarifying questions? They'll say, yeah, absolutely. I'll say, yeah, you gotta be able to ask clarifying questions. You don't want to interrupt the storyteller, but in a natural break, when you said this, did you mean that? Yeah, okay. And you know, I think this brings up listening skills. The fact you knew you had to tell the story back, did that make you listen more attentively? I mean, do you ever fake listening? My wife will be talking to me and I'll be nodding my head and she'll say, what did I just say? And I'll be like, I don't know. No, you had to listen because you knew you had to tell the story back. But maybe the most important reason I put this into one of my classes is this is what you have to do in internal auditing. In your work papers, they must tell a story around the management of risk, telling the story back to a regulator, back to a chief auditor, back to a public accountant, back to anybody that cares about the management of risk, that your work papers have good audit evidence that proves the control's effective or not. You know, just my opinion, I would not put a lot of background information in your work papers. I would not clutter up your work papers with a lot of background information. I mean, I had a regulator take a look at one of our work papers one day. I printed it out for him. It must have been a 10-page work paper. He said, where does your testing start? I said, page 8. He's like, what's on pages 1 to 7? You know, just some background information. They had a new system, some turnover. And he's like, oh, put that information in a separate document. Don't clutter up your work papers with a lot of background ancillary type information. Your work paper should only have the audit evidence that proves the control's working or not, that I can re-perform the work. Remember what I said earlier, and come to the same conclusion you did. The control's working or not working. The other reason I would say be careful what you put in your work papers is you never know where your work paper might end up. A few weeks ago, I was teaching a class and I asked the students, how many of you have ever had a work paper subpoenaed? How many of you have ever had a work paper brought into a court of law? I think I had 6 hands go up. I mean, I was shocked. I asked one of the students, what happened? She said, well, a woman was terminated as a result of our audit. I mean, we didn't terminate her. Her boss terminates her. The audit proves she's not doing her job. She sues the company for wrongful termination. It goes all the way to court. They want to take a look at our work papers. What evidence do we have that proves this person's not doing their job? I mean, I would just be careful what you put in your work papers, the audit evidence that proves the control's effective or not effective. And let's take a look at that, the 4 components of good audit evidence. You know, if you take the certified internal auditor exam, this is always on the exam. You gotta be able to spit this back. What are the 4 components of good audit evidence? Evidence should be sufficient, competent, relevant, useful. But what does this mean? What does this mean? Well, just some definitions for you. Sufficient would get at sampling. I mean, you would be amazed at the difference in sample sizes as I look at work papers from various internal audit groups. I mean, some audit groups test 10 items out of a population of 1,000 items or 10,000 items and try to conclude the control's effective. I mean, I don't think you have sufficient evidence. I don't think you tested enough evidence that proves the control's effective or not. Competent, and maybe the most important of the 4 here is competent. You looked at an original document, not a copy of a document. I mean, you watched them open the vault. You didn't just take their word for it. When I teach my in-charge auditor class, we talk about writing audit programs that drive the auditor who's going to do the testing to gather sufficient, competent, relevant, useful audit evidence. I don't want the auditor guessing who's doing this test. I want to direct the auditor to gather the best evidence possible that will prove to anyone the control is effective or the control is not effective. The third one, relevant. I mean, why is this on the list? You mean, I didn't tell you this at the start. I have 4 kids. They're all grown now, but when they were little, you know, I'd tell them something and they'd say, "No duh, Dad. No duh." Like, you don't have to tell me that, Dad. I know that, Dad. Is relevant a no duh? I mean, wouldn't every auditor know that evidence should be relevant to the test objective? Again, you might be surprised if you looked at work papers from various audit groups. I was looking at a work paper one day and there was all this testing, all this evidence. I just don't think the evidence was relevant to proving the effectiveness of the control. They did a lot of work here. I just don't think it was really relevant to proving the effectiveness of the control. And then finally, useful. Useful to the organization, useful to us in determining if the control is working to mitigate risk to an acceptable level. Jim, why don't we go to our third polling question today, a little testing of what we were just talking about with regard to audit evidence. If you wouldn't mind putting that one up in front of the students. Poll question 3. I'll just give Jim a few minutes, a second here to get the poll 3 up in front of you, and we'll just have 2 more polls today, 1 more after this one towards the end of the webinar today. Jim, if you wouldn't mind, could you put up polling question 3? Jim, are you able to do that? Are you able to put up poll question 3? Jim, can you launch poll question 3 for us? Otherwise, we'll come back to that here in just a minute. There we go. Audit evidence consists of all of the following except which one? Audit evidence consists of all of the following except which one? You're doing good. Give it just a few more seconds, see if everybody would want to vote on this one. Remember, you need to answer the polling questions for CPE. You are correct. The correct answer is defined is not one of the 4. Remember, you need to be able to recite this back. What are the 4 components of good audit evidence? Sufficient, competent, relevant, useful. Thank you, Jim. Let's go to our next slide here. Again, I'll let you just take a look at this. Remember the last bullet on this slide, as I mentioned about audit evidence being in a court of law. Again, I'm always careful what I'm going to put in my work papers. The background information, as I said earlier, I would recommend you put it in a separate document. Nature of audit evidence on this slide, and this is another question I saw on the Certified Internal Auditor exam. What is the most common form of audit evidence? And I actually gave it to you if you look at the third one on the list here. Documentary is the most common form of audit evidence. You know, and a lot of things can fall into the documentary category. You know, any type of document like a credit file, an invoice, I mean, a report, a lot of different things could fall into the documentary category. Before I show you some work papers, just some attributes of good work papers as we're going through these slides. You know, I mentioned at the start today, one of the classes I teach is a business writing class. Do you know the problem most people have when they write? And you know this, you just maybe haven't thought about this for a while. The problem most people have when they write is they write from their own point of view. They don't write from the viewpoint of the readers. They don't write from the viewpoint of the audience. And it's the biggest reason they don't get results when they write. I have a little activity at the start of that class where I get the students into groups. Each group is assigned a project where they have to write a 12-word want ad for the classified section of a newspaper, something they want to sell. Each group must write a 12-word want ad for the classified section of a newspaper, something they want to sell. Cannot be more than 12 words. Each group puts their ad on a flip chart paper, and one at a time they present their ad to the rest of the class. I then tell the rest of the class you're looking for exactly what they're selling. But for some strange reason today, there's 30 other people selling the same thing that they are. Raise your hand if you would respond to this ad. Raise your hand if you think this would be one of the few ads you would respond to. And I say, you know, you're only going to respond to maybe 2 or 3 out of the 30 ads in the paper today. Raise your hand if you think this is one of the few ads you would respond to. Most groups, hardly any hands go up. When I ask the students why you did not respond to the presenting group's ad, they'll say, well, it doesn't have this, it doesn't have that, it doesn't have what I was looking for as the reader. And it brings up the whole point, most people don't think about the reader when they write. Our work papers, same thing. You write from the viewpoint of the audience. Again, I go back to audit evidence, that the audit evidence would prove to anyone. Remember the little example? Your work papers must tell a story back to anybody that cares about the management of risk. They will come to the same conclusion you did, that the control is effective or the control is not effective. And here's that slide just so you wouldn't forget about it. A separate slide here on slide 28. Always have that in mind when you're doing your testing. Just a few things as we've been talking about. Remember, in field work, we're always testing for control effectiveness, a number of things here. You know the old auditor adage, trust but verify. I mean, you should use good interview skills. That's one of the reasons I have it in one of my classes. But you always want to verify what they told you is true. And remember, there's different ways to test controls that can help you verify that the control is actually effective. Again, that you can trust what they told you is true and verify what they actually told you is true. We'll talk about issues and recommendations, findings and recommendations in just a few minutes here. Before we do that, though, take a look at the 4th bullet on this list. Our work papers are confidential. In fact, most of the information we come across that we have access to is confidential information. I just put it in the training today because if you have newer auditors on your team, you want to make sure they understand that. We had auditors lose their jobs for sharing confidential information. I mean, we would never share our work papers with an auditee, with the people that we test. You know, one day I was looking at a credit file. I came across a friend of my dad's. You know, ever since I was young, my dad held this guy up as the greatest guy in the world, okay? Now I'm looking at his credit file, and we are about to foreclose on him. He has huge financial problems. Now, if I would have gone to my dad and said, you know, Dad, this guy's not so great, I could have lost my job. You just got to be really careful that everybody in the internal audit group understands that not only are our work papers confidential, but the audit evidence we use to prove the effectiveness of a control is confidential as well. The last 2 bullets on this slide, and I'm not saying this is a best practice, but I've come across a few audit groups that do not allow the auditor to cite the regulation in the work paper if they come across a regulatory violation. What did he say? I mean, I've just noticed this several times now where in the audit policy manual, if an auditor is testing for regulatory compliance, and finds that the business is not complying with a certain regulation, they cannot cite the regulatory violation, they cannot cite the regulation in the work paper. It's always exception to corporate policy. They couldn't say management is not complying with Reg Z or Reg E or something like that. It would be management is not complying with corporate policy with regard to credit documentation, blah, blah, blah. I mean, why do they do that? Well, I don't think they want to raise flags for the regulators. And also, we can protect ourselves under attorney-client privilege in certain scenarios. So, I mean, I just bounced this off you. I'm not saying a lot of audit groups don't have that policy, but kind of surprised I've noticed it a few times as I do my training for various internal audit groups. This slide, I want to just speak briefly about the first bullet. I attended a training seminar a number of years ago, and the instructor asked the class this question. We were all auditors, most of us were audit managers. He asked this question: what is the first question you always ask when you start an audit project? Again, what is the first question you should always ask when you start an audit project? And we all shouted out, oh, what are the risks? I mean, I've been talking at the start today. You need to be a risk expert, answering the so what question based on risk. Well, he said no. The first question you always ask when you start an audit project is, what is the business? What's the business? Do you understand the goals and objectives of this business? Do you understand their products and services? Do you understand the technology the business uses? Do you understand the regulations that impact the business? What's the business? And only then should you start to think about risk. Most audit groups in the planning phase of an audit project do some type of analysis of the business to answer that what's the business question. Then they do the risk assessment, the matrix, the Excel document I was showing you earlier, but only after they've completed some form of analysis of the business. You know, the last bullet here on fraud, I gave you that little example of an auditor on her first audit. I mean, just in the normal course of your work, and you know if you work in a larger organization, this could be going on as we speak. In the normal course of your work, if you come across something that you are not comfortable with, that doesn't look right, at least get somebody else to take a look at it. Don't pass on it, because it could go years before it's actually detected. I mean, at least get somebody else to take a look at it. Don't pass on it. It could go a long time before it's actually detected. That auditor I mentioned earlier, it was her first audit. And she came across and she asked that who, what, when, where, why, how question again. You know, I don't know if you agree with this. Statistics show 3 out of 4 people will steal under the right scenario. 3 out of 4. What? I mean, if I asked you today, would you steal? I bet all of you would say no, never. I'm not that type of person. Well, let me paint a scenario for you. You have a daughter who's very sick. She needs a major medical procedure. She will die if she doesn't get the procedure. Your insurance will not cover the medical procedure. You don't have the cash to pay for it, but you work in a job where you could benefit yourself. You could steal a cashier's check, manipulate a wire. Might you steal? I know you've heard about the fraud triangle, where we come into play opportunity. When you are testing for control effectiveness, if the control is not effective, just ask yourself this question: could it be an opportunity for someone to steal? You know the example I gave you earlier where I found all the keys in a spare drawer and I realized that the control was not effective, the vault was not under dual control? Do you know the next question I asked them? Have you had any losses in the vault? Because your vault is not under dual control. Have you had any losses in the vault? Just a thought. You know, the first bullet on this slide, I had a kind of a bad situation come up when I was an auditor in charge. It was one of the last days of the audit, and I started to review one of our audit staff's work papers, and I realized he scoped out an entire area of testing. He did not test steps 1 through 5 in this one work paper. I said, Jim, you didn't test steps 1 through 5. He goes, no. Why not? Well, I talked to one of our other auditors and she said, we never do those tests. I said, well, I'm the in-charge auditor. I did the risk assessment. This is a high-risk area of testing. We got to do these tests. And it was a massive scrambling on the last day of the audit to get other people to help them out, pick up this work, and complete the testing. I mean, just be sure any questions with regard to scope always go through the auditor in charge. If there's any questions about the control effectiveness testing, do I need to test this or not? How do I test this? Always go through the AIC. All right, let's take a look at some work papers. And I'm just going to kind of bounce back and forth. I'm going to show you a work paper, bounce back and forth between the PowerPoint slides and an actual work paper. Let me just put this up in front of you here. Let me go to a work paper. Again, I'm just picking and choosing as I travel about work papers that I like. This audit group uses Lotus Notes for their work paper package. And what do you notice here? And this is called a test document. Right at the top here, this is a test document. We're in Fieldwork now. We're testing for control effectiveness. Does this look familiar to you? At the top of the work paper, risk description, control description. Remember this? Remember the risk matrix I was showing you earlier? Here's the risk description. Here's the control description. And right at the top of the work paper, the auditor has copied and pasted the risk description and the control description. So if I'm the auditor doing the test, I've got the risk right in front of me and I've got the control right in front of me. A well-written risk description, remember, can answer the so what question and give me a good idea how to test the control for effectiveness. A well-written control description can help me assess adequacy and give me a good idea how to test the control for effectiveness. And now I'm in Fieldwork, I'm testing the control for effectiveness, and if the control is not effective, if the control is not working, and management asks the so what question, so what if I don't fix this? So what if I don't have the control? I can go back to the risk description, which comes from the risk matrix, and sell management on the importance of the control. Here's what can happen if you don't have the control. Here's the risk. Risk description and control description right at the top of this particular work paper. A good work paper should have an objective statement and obviously the actual testing steps themselves. Let's go back to the work paper here, and this is what I'm speaking of with regard to the objective statement. Remember I'm going to page down here to the objective. Remember, the objective should always be stated in terms of testing the effectiveness of the control. We have already assessed control adequacy in the planning phase of the audit project. Now here in Fieldwork, we're always testing for effectiveness. Always, always. Back to the PowerPoint here for just a second. There should be a scope section in a work paper. Now why? Why should a work paper have a scope section? Let's go back to the work paper here and take a look at this. The scope section, just page back up to scope here. The scope section should tell any third-party person how the auditor set out to accomplish the objectives of the test. What? Again, my opinion, the scope section of a work paper should tell any third-party person how the auditor set out to accomplish the objectives of the test. Who did you talk to? What are their job titles? What reports did you look at? How did you obtain those reports? What is your sample size? How did you validate the population? How did you pick your sample? I mean, all of that should be documented in the scope section of a work paper. So I don't have to repeat that information in the actual testing area. Again, when I get to the steps where I'm actually testing down below here in the work paper, I don't actually have to repeat that information. Let's go back to the PowerPoint here. We talked about good audit evidence, attribute testing. You know, you cannot always do this, but if you could set up like an Excel spreadsheet to guide the auditor for testing specific control attributes, that may be a good thing. I mean, let me give you an example. Let's say I wanted you to test, I'll use reconciliations again. I would set up an Excel spreadsheet. Each column would be the control I would want you to test. Test for timely preparation, test for segregation of duties. Each row would be the accounts I want you to test for. I would set up an attribute testing spreadsheet to guide the auditor to test the specific controls I want the auditor to test. But now let's talk about exceptions and issues. Again, is there a right way to do our work? Is there a right way to document control weaknesses? Now I'm just going to say this. In fact, let's go to the work paper as I explain this to you here. As I travel about looking at work papers, a number of audit groups document control weaknesses like this. When the auditor comes across a control weakness, they'll flag it with an X. Now I know this is in black and white today, but a lot of time the X's will be in red. X1 is the first control weakness I noticed. X2 is the second control weakness I noticed. X3 the third, etc. I mean, there's no significance to the X's. I want to make sure I'm clear about that. It's just got a problem here. I want everybody to notice this. I'm the auditor doing the test. I'm going to flag this. Got a problem here. X1 is the first control weakness I noticed. X2 the second. X3 the third. No significance to the X's. Now, once I flag it with an X, what do I need to do? I need to describe the control weakness and give my opinion. How significant is this control weakness? Is this something isolated and immaterial, which I'm not even going to tell the auditee about? I'm not even going to tell the business partner about? I'll document it in the work paper, but I won't even tell the business partner about. Is this an exception, the next level, the next most significant, where I'm at least going to report it verbally to the business partner and see what the business partner says? Or is this the most significant control weakness where I will write an issue and recommendation that will probably end up in the audit report? Management will need to respond back to me with their corrective action. This is the only thing I want you to get out of this right now. No big deal, isolated immaterial exception. Could be a big deal, exception, I'm going to report it verbally. Big deal, issue and recommendation, probably ends up in the audit report. All right, look at the examples here. X1, I flag it, here's my first problem. What's the problem? 1 of 45 loan documents were not being placed in the proper file. There's the control weakness. Now, how significant is this control weakness? This is considered an isolated immaterial exception because the one missing loan document was located, Sally Clerk is knowledgeable, blah, blah, blah. I'm done. I'm not even going to go to the business partner and say, hey, did you know that 1 of 45 wasn't filed? No. I'm not going to waste their time. I'll document it here. The in-charge might have a different opinion. The in-charge auditor reviewing my work may say, you know, Bill, this is a regulatory violation. We should at least report it verbally. But my call, I'm the auditor doing the test, no big deal. It's isolated immaterial. Now look at X2. 5 of 45 loan documents were not properly approved. I mean, 11% of everything I saw was a problem. That doesn't sound isolated to me. What's my call here? How significant is this? This is an exception. And for a lot of audit groups, it goes to an exception document. I report it verbally to the business partner. I document what they told me. Look at X3. 10 of 45 loan documents, I mean, 22% of everything I saw was a problem. We're missing collateral information. What's my call here? This is an exception. I'm at least going to report it verbally to the business partner. And you know, now that I have both X2 and X3, I'm thinking about writing the issue and recommendation. Isolated immaterial exception, no big deal. Not even going to tell them about it. Exception could be a big deal. I'm going to report it verbally. Issue and recommendation, big deal. Formal reporting in writing probably ends up in the audit report. You know, most audit groups, if you're the auditor doing the testing, you come across an exception, require that the auditor make copies of those exceptions, scan them, put the PDF, embed the PDF of those documents right in the work paper. So anybody reviewing the work paper can just click on it, see what the problem is, see what the auditor actually saw. Usually some type of electronic source document. If possible, make a copy, scan it, put the PDF in the work paper, Remember, I keep thinking about the re-performance. Could a qualified third-party person re-perform the work, see what I saw, come to the same conclusion I did? The control's effective or not effective? Conclusion statement should always reference back to the objective. I'll just tell you this, I see problems with this as I look at work papers. If the objective statement in the work paper says we are going to test the effectiveness of the control, the conclusion statement should conclude on the effectiveness of the control. The conclusion statement always ties back to the objective statement. And a lot of different ways you can conclude. I mean, some audit groups tie the conclusion statements to the report rating. All right, before we talk more about control weaknesses, just a few fieldwork tips here. You cannot over communicate during fieldwork, not only between the auditors working on the audit, but with the auditee, with the business partner as well. And where I used to work, we would send surveys out at the end of every audit project asking for feedback on us, asking for feedback on the auditors. And you know, most of the feedback was really positive. The auditors are great, right? But do you know one area of criticism I often saw? Lack of communication. Lack of communication. I mean, by the time we give them the audit report, no surprises. We've communicated these findings throughout the audit project. I mean, I would recommend you set up regular communication guidelines with the business partner, with the auditee right at the start of the audit, especially if you're the in-charge auditor. We meet every Friday if it's a multi-week audit or whatever. When I come across control weaknesses, I'm going to continually update the business partner on our findings. Again, no surprises by the time they get the audit report. Okay, let's go back and talk about the most significant control weakness. But we will start with talking about spiders. What? Well, the next two slides summarize an article in the Internal Auditor magazine. Again, if you're a member of the Institute of Internal Auditors, you get the Internal Auditor magazine, yay. Okay, there was an article in there a few months ago titled, "Killing the Spider." What? It was an analogy all around identification of root cause when it comes to control weaknesses. What do you mean? Here's the analogy. You go into your closet and you find spider webs and you clean up the webs, but you don't kill the spider. What are you going to have a few months later? More webs. You got to get at the root cause of the problem. You got to be able to kill the spider. And this article talked all about identification of root cause. Remember throughout the webinar today, who are the best auditors? They could always identify root cause. If they came across a significant control weakness, again, we'll talk about issues and recommendations next, they could always identify the root cause of the problem, and more importantly, that management's corrective action addressed root cause, killed the spider, and so I won't see this again on the next audit. It's not going to appear in the next audit report as well. The corrective action plan from management associated with this issue kills the spider. I mean, this just popped in my head. Do you ever go into a doctor and you say, "Hey doc, I got this pain in my side." And the doctor says, "Take this drug, it will get rid of your pain." And I do. And I come home from the doctor's office and my wife said, "What'd the doctor say?" Said, "I got to take this drug, it's going to get rid of my pain." She says, "Yeah, but why do you have the pain?" You know, I don't know. He just said, "I got to take this medicine." I mean, I don't know about you. Sometimes I walk out of a doctor's office thinking that the doctor just treated the symptom, but really didn't address the root cause, really didn't tell me what the cause of my pain was. I mean, is this cancer? I'll take the drug. I don't like the pain, but why do I have the pain? And it's the same thing in internal auditing. A good auditor can always identify root cause and make sure that management's corrective action plans address root cause. Kill the spider, don't want to see it again. One of the things you're seeing on this slide here in that first bullet in the sub-bullets, one of the things the article brought out is if you look at the COSO components, the components of internal control for the management of risk as defined by the Committee of Sponsoring Organization, One way to identify root cause is to see if it was a breakdown in one of the 5 components of internal control. I mean, just a thought here. This slide summarizes what I was just speaking about earlier, the 3 levels of control weaknesses. No big deal, could be a big deal, big deal. As we start talking about issues and recommendations, again, I know you know this, but just so we're on the same page, this is what's going to end up in the audit report. Usually these need to be formally approved by somebody in audit management. These will be given to the business partner. Again, I call the auditees, same thing, the people we audit. They will be given to these people in writing, and management must respond back to us in writing with their corrective action plan. And as I said, the key thing with the corrective action plan, does it address root cause? Does it kill the spider? You know, the first bullet on this slide, I would recommend, if you are the auditor doing the testing, that you validate the control weakness at the time you identify it. What do you mean? I mean, that example, 5 of 45 loan documents were not properly approved. I would go to the manager of that business and say, you know, here are 5 loan documents. I don't see an approval signature. Should they have been approved? Yeah, you know, I don't know why they weren't. Okay. I just want to make sure I'm thinking straight. I want to validate it with the business partner right now, with the auditee right now. I don't want to start writing the issue and then I give it to them in writing and they say, no, remember these credits don't require approval or something. No, at the time I identify the control weakness, I want to validate it. Management's response, addressing root cause. All right, let's go ahead and let's talk about issues and recommendations. The big deal, what typically ends up in the audit report. I said earlier, as I look at audit reports, a number of auditors, a number of audit groups struggle with writing issues and recommendations. What do they struggle with? What do they struggle with? Well, first of all, what should a well-written issue and recommendation contain? And I know you might be tired hearing of this, but this is another thing always on the Certified Internal Auditor exam. A well-written issue and recommendation should have a condition statement, a criteria statement, a cause statement, an effect statement, and a recommendation statement. I like to think of these as a series of what questions. Condition, what is the problem? Criteria, what should management be doing, like following a policy? Cause, what led to the condition, what led to what is? The effect is the so what question, again, the risk question. And finally, the recommendation, what should be done? Do you know what I notice? When I look at audit reports, a lot of times they're missing at least one of these. I can't find the criteria, I can't find the cause, I can't find the effect. Again, a well-written issue and recommendation should have all 5 components. Now remember what I said earlier. You always sell the recommendation, you sell the importance of the control based on the effect. You don't sell it based on the criteria. Remember the bad auditor? Hey, Mr. Manager, you're not reconciling this key general ledger account. That's the condition. The bad auditor goes to the criteria. The manager says, so what if I don't reconcile? Don't you know there's a policy that requires you to reconcile? They go to the criteria. No, that's a checker. That's a bad auditor. What does a good auditor do? We just had a $7 million fraud loss. The good auditor goes to the effect. We just had a $7 million fraud loss, same type of account that was being manipulated for fraudulent purposes. If they had reconciled it, we would have caught the fraud. You always sell the recommendation. You sell your recommendation, your point of view, the importance of the control based on the effect. And remember, our recommendations, and more importantly, management's corrective action plans must address the cause, the root cause of the issue. Kill the spider. All right, how might the IIA test your knowledge on this? I'm just going to show you some questions from the CIA exam with regard to issues and recommendations. Just take a look at this and we'll just do this together. Here's the scenario. We find that due to inadequate monitoring of cost-effective transportation and hotel options, The department's travel budget has increased steadily by a total of 1% per quarter, thus failing to achieve management's objective of reducing travel-related expenses by 1% over the same time period. Which of the following elements is missing from the findings stated above? Okay, well, let's go line by line and figure out what's here first to determine what is missing. We find that due to inadequate monitoring of cost-effective transportation and hotel options. What is that? That's a cause statement. The department's travel budget has increased steadily by a total of 1% per quarter, thus failing to achieve management's objective of reducing travel-related. Well, first of all, the department's travel budget has increased steadily by 1% per quarter. That's a condition statement. Thus failing to achieve management's objective of reducing travel-related expenses by 1% over the same time period. What's that? That's the criteria. What's missing? What's missing? The effect. That's how the IIA often tests your knowledge. Do you know the attributes of a well-written issue and recommendation? Condition, criteria, cause, effect, recommendation. Here's another one. Late charges were waived on an excessive number of delinquent installment loan payments at the Spring Street branch. We were informed that late charge waivers are not approved by an officer. Approximately $5,000 per year in revenues is being lost. In order to provide a better control over late charges waived and loss of income, we recommend that a lending officer be responsible for waiving late charges and that this approval be in writing. Which of the following elements of a deficiency finding is not properly addressed? Again, what is missing? Well, again, what's here? Late charges were waived on an excessive number of delinquent installment loan payments at the Spring Street branch. That's the condition. We were informed that late charge waivers are not approved by an officer. That's the cause. Approximately $5,000 per year in revenues is being lost. That's the effect. What's missing? What's missing? The criteria. Okay, Jim, just to see if they've been paying attention, let's do our last polling question today. Polling question 4, if you wouldn't mind putting that up. Which of the following is not an attribute of a well-written issue and recommendation? Which is not an attribute of a well-written issue and recommendation?
Bill, we have one question that came in.
Okay, go ahead.
Okay, if the root cause is human error, what corrective action can management do?
Well, again, did the control detect that? Again, is the control actually working that would detect any of those types of errors occurring? I mean, maybe they don't have maybe they need another control. Maybe they don't have an approval process in place or a secondary review or something like that that might be able to identify that. But if that's the root cause of the issue, the corrective action plan possibly again would be controls related to maybe further controls or maybe to some type of a review process, something like that.
And would human error be a cause, or would that be an effect?
Human error, I guess, would probably be more of a cause in my mind. Okay. Yeah.
And then we have a question. Can the presenter please explain again about opining the adequacy of controls only once for each risk? Why not opine on the adequacy of each risk?
Really, it is opining on the suite of controls related to each risk. You're assessing the suite of controls related to one risk. Overall, if they have 4 controls related to one risk, do these controls adequately mitigate risk to an acceptable level, mitigate residual risk to an acceptable level? You're opining on adequacy for the suite of controls, not just each individual controls for each risk. A lot of you did well here. Again, validation is not an attribute of a well-written issue and recommendation. Thank you, Jim. Last thing today, or before I get to this last slide here, I just wanted to show you something here. I'm going to go bring up an issue and recommendation. so you can take a look at this. An example of one here. You'll notice a title here. I would recommend you title issues and recommendations either as a condition statement or a recommendation statement. By the way, when I teach my business writing class, I give this statistic. What is the average amount of time a reader spends with something in the written form when they first receive it? How long? Again, my question is, and this is from a recent business writing study, what is the average amount of time a reader spends with something in the written form when they first receive it? How long? 3 to 5 seconds. 3 to 5 seconds. The title of the INR should be an attention grabber. I mean, if I'm looking at this, I know if I'm the reader, if I'm the auditee, I need to strengthen controls over lending activities. Now remember the finding we were looking at earlier? Remember this, X2 and X3? Here is the issue and recommendation related to those two findings. Management is not reviewing loan files to ensure documents are approved and collateral is documented. We noted 5 of 45 loan documents without proper approvals. 10 of these documents were missing collateral information. There is the condition. The credit policy requires all loan documents to be approved and collateral to be documented. There is the criteria. Management indicated they were not aware of the policy requirements. There is the cause. Now the effect, lack of proper approvals and collateral information could expose the company to substantial loss. And finally, the recommendation. Remember what the cause was. Remember the recommendation must address the cause. If the cause was they were not aware of the policy, we recommend management provide training to all staff members to ensure compliance with the credit policy. I'll be honest with you guys. I mean, just my thought here is, this just popped in my head. I would recommend a separate field for each component of a well-written issue and recommendation. This audit group combines the condition, criteria, and the cause in the issue field, but I would actually separate those out in separate fields so the auditor would not forget that all of those are required in a well-written issue and recommendation, and the effect and the recommendation in separate fields. Now you see issue ratings here. Let me just go back to, you see high here. I'm going to go back to our last slides on the PowerPoint. A lot of audit groups rate issues like high, moderate, or very high, something like that. Why do they do that? Well, it can drive the report rating. I mean, if we have a lot of high-risk issues, they probably are not going to receive our highest report rating, okay? But I've also noticed it can drive the follow-up process. Now, what do you mean? Well, when we give the issue in writing to them during field work, remember, management must respond back to us in writing with their corrective action plan. When management has completed their corrective action plan, we often go back and follow up to determine that they've addressed the root cause of the issue. And if this issue is rated high risk, we'll probably go back and retest, pick a whole new sample, retest. That's what I see audit groups doing. Pick a whole new sample, retest to make sure it's not a problem anymore, to make sure they've addressed the root cause of the issue, to make sure that they have killed the spider. So audit groups rate issues, could drive the report rating, could impact the follow-up process. High-risk issues, we go back and retest to make sure they've addressed root cause. Jim, any other questions come in today?
Yeah, we do have one more question here. Is relevance of audit evidence interchangeable with appropriateness of audit evidence?
Well, I know the correct terminology would be relevance. And remember, relevance is always going to the objective statement. So I like relevance. Appropriateness could be misunderstood. Is it relevant to the test objective? Relevant to proving the effectiveness of the control?
And couldn't appropriate be applied to each one of the elements?
Possibly, but again, I'm going back to the specific definitions of what do we mean by sufficient, what do we mean by competent, what do we mean, for each of the components, how those are being actually defined to make sure that, again, we've got the best evidence possible. And I guess you could say appropriate in that case, but I'm always looking at the best evidence for each of those components.
Okay.
Well, I want to thank everyone today. My contact information is here, bill@woodingtontraining.com. I'd love to come into your organization and do some training, but Jim, I'll turn it over to you to wrap up today.
Well, thank you, Bill, for a great presentation and a lot of great information for our attendees. Bill will be doing, I think we have one or two more webinars in
Yep,
this
yep.
series. Yeah,
Mhm.
those will be coming up. So watch the AuditNet site for more details on the additional webinars that Bill will be conducting with us. Also, if you reminder that if you wanted to watch the recording for today, we will be sending out a link to the recording. It'll come out in approximately 5 days, 5 business days that is, as well as the CPE link. If you qualified for CPE, we will be sending out an email, and you must be able to receive emails from noreply@gensend.io. That's part of the housekeeping rules. So please read those rules. They were emailed to you, and they're also available as a download. Reminder also, if you couldn't download the slides from today, you can download the slides from SlideShare. If you send a request to me to email the slides, we will have to assess a processing fee for that. I believe the next slide, Bill, has information about C-Risk Academy. C-Risk Academy has all of our webinars, and you can go to C-Risk Academy. There are some free ones that are available, but if you want to sign up and live streaming of the video on demand for all of our webinars, you can go to C-Risk Academy. You can watch the recordings, and you can also earn CPE for those. So again, thank you, Bill, for a great presentation. Thank you all for joining us today and for your questions, and wish you all a good day. Thank you.
Thank you.